Welcome back. You're watching The Money Show, and it's time to get your portfolio queries answered because this is the only show where we focus on your investment strategies and help you align them with all your financial goals. And today, for this very special edition, we are joined by Abhijit Choksi, our expert on the show. Hi, Abhijit. Evening, and welcome to The Money Show. And yes, we have very interesting questions specifically from you, from our viewers. And let's focus and let's take Ram Kumar's question first. And he says that he is 59 years old. He's a farmer and belongs to Haryana. And he says that his son is a regular viewer of our show and he follows you as well. And he wants to invest in mutual funds. So he has 10 lakhs fixed deposit, which is getting matured in March next year. And he wants to invest that money in mutual funds for 15 years. And he also wants to build 10 lakhs portfolio for the next 15 years, and 4 schemes, if you think, can be suggested for that time frame and that corpus. So Mr. Ram Kumar, thank you so much for showing this trust on our channel, on the show, on our expert. And well, hats off. Your fixed deposit is getting matured and time to also put money in the market because markets are volatile. I'm sure Abhijit is going to talk about the benefits of investing during such kind of a market movement. So Abhijit, this is what we call financial inclusion also. Mr. Ram Kumar is a farmer, but then look at his son. His son is not only helping him, his father, go ahead in his financial journey, but also he himself is trusting mutual funds and equity markets and trying to, diversify his investment portfolio. Abhijit.
Yeah, hi, good evening, Kavita. Absolutely, this speaks volumes about the whole digital ecosystem and the interest of a lot of participation, even from the rural part of India in the financial sector. Now, the best part about his question is that he has at least 15 years of horizon, which is something which we suggest to every client. When it comes to equity, always focus for long term and have a minimum horizon of 5 to 7 to 10 years at least when it comes to equity mutual funds. Looking at his situation, I would recommend him 2 things. So first, as he has mentioned that in the March next year, his FD is maturing. So I can see that what he should do in such kind of a volatile environment, that instead of SIP, he can do STP. So for viewers who don't know, STP is basically systematic transfer plan. So what he should do is that he should put his FD once it matures in like a liquid fund, for example, HDFC liquid fund. And after that, every month he should transfer 83,000 or 84,000 per month for the next 12 to 15 months. And the funds in which he should transfer, I would just recommend him these 4 funds. Again, having too many funds in a single portfolio is not advisable. So mild diversification, maximum to 4 portfolios based on large, mid, small, and 1 flexi cap. So for him, I would recommend investing equally in these 4 funds. So HDFC large cap fund for the index level stability, then SBI mid cap funds, I would recommend him. Then DSP small cap for a bit high risk but long term growth, and the Parag Parikh flexi cap fund, which does a lot of diversification. So overall, if he's able to do this, follow this STP with the regarded amount, I think he'll be able to amass at least 50 lakhs of corpus in 15 years, assuming 10 to 12% returns. And he definitely should review his portfolio every 2 to 3 years. And if there are any other questions, please tell me. Thank you.
Sure. So Abhijit, I really want to ask this question, and this is to help our viewers understand the strategy better. So his father is someone who believed in investing in fixed deposit. Obviously, I'm sure the conservative nature also took over there, and people don't understand equity, so they don't feel confident in putting money. But then here we have a younger generation who's shown interest and confidence in equity markets. Now, how is this transition of taking out money from fixed deposit when it gets mature and putting that money in equity markets? Do you think that's the right strategy, or you think that it should be diversified? I mean, just don't put all the money, maybe just continue a different FD. How can one diversify this better, depending on what conditions?
Yeah, so in this case, I have assumed that there is an adequate emergency corpus secured by Mr. Ram Kumar, and I'm also assuming that this FD he's investing especially for the future of his son for the next 15 years. So in that case, I was suggesting to have an all equity portfolio only because his horizon is 15 years. In case if he has a lower horizon, or in case if he does not have any emergency fund, or this is his only savings, then definitely it would be a bit risk on the high risk side to invest everything in equity. And to weather the whole mean reversion, I have suggest instead of doing an lump sum investment, I suggested him an STP. But assuming that he does not have an emergency fund, he should definitely keep his FD for at least 50% of the FD amount. He should continue, and the rest he can invest in these mentioned funds.
Sure, sure. I also want to understand if later on he decides to do an SIP also, can these funds be considered for that?
Absolutely, absolutely. These four funds cover more or less the entire segment, including the large to small cap, and also we have added a diversified fund. So it does, yes.
All right, interesting. Okay, let's move on and let's take Mr. Shivaji Nathe's question, Abhijit, and he says that he's 38 years old. He has a couple of funds in his portfolio. We'll just flash on the screen as well. Motilal Oswal mid cap, Nippon India small cap, SBI long-term equity, GM flexi cap. Total SIPs of 6,700. He wants to step it up by 25%, and he has stepped it up actually. The target is 15 years, and he's invested through Grow app. He wants to know the corpus that he can accumulate in 15 years with this kind of investment amount and with these funds, and also how is the fund mix?
Absolutely. So as I can see, Shivaji is planning to do a 25% step up, which is excellent because this changes the results entirely if we do with step up and without step up. Now looking at his portfolio, Motilal mid cap looks good. He can hold that. Nippon small cap also can be hold. The one thing which I would suggest him in SBI ELSS is that only if the tax saving is a goal, and if it's required, he can keep it. The rest he can replace it with the fund and discuss. And again,